Good afternoon, this is Bob Iacchino along with Mike Arnold from Path Trading Partners with a weekend update covering the FX markets for the week of June 4th. Interesting week with the important non-farm payrolls number coming out on June 2nd, this past Friday. U.S. non-farm payrolls rose 138,000. The report was a bit of a disappointment except for the continued drop in the rate, which fell down to 4.3%. And revisions to March and April, which trimmed 66,000 jobs from the previous total. April was revised to 174 from 211, and May was revised to 138 from 184. Wage gains were steady, up 2.5% versus a year ago. There was a couple of bright spots. Again, the unemployment rate fell to a 16-year low at 4.3% versus 4.4% last, but the participation rate fell to 62.7% from 62.9%. Also, the U6, which is the measure of all people who are employed, underemployed, or looking for work. So in other words, someone who wants to work but continues to be disappointed and has stopped looking, but they theoretically want to work. Those people are included in the U6 number, and that's down to the lowest level since November of 2007 at 8.4%. It was weaker than expected, but it does not seem that it's going to stop the Fed from raising rates in June, as the CME Group's Fed Watch tool didn't drop any further than 91% probability of a rate hike. Angela Merkel downplayed partnerships that Europe has relied upon in the past at a campaign event inside a Bavarian beer tent after the NATO and G7 meetings. Angela Merkel, the German chancellor, said that the times when Europe could rely on others were over. She also said while friendly relations with the US and the UK are needed, she didn't say wanted, she said needed. She also added we have to fight for our own future by ourselves. Germany's got an election coming up on September 24th. Mario Draghi does not seem ready to unwind any stimulus packages. Speaking before European Parliament's Committee on Economic Affairs this week, Draghi downplayed the odds of any shift in policy at next week's policy meeting by the ECB. Economic growth is improving, he said, but inflation remains subdued. And he added that the economy still requires substantial stimulus. A lot of analysts, including myself, expected the ECB to signal that they're going to start tapering bond purchases and maybe even thinking about hiking rates down the road. But with very low Eurozone inflation data, it's only up 1.4% year over year right now. That was released late last week, showed that probably the expectations for that tapering are a little wishful thinking. The UK polls tightened. The opinion polls that have come out ahead of next week's UK general election, which takes place on the 6th, have been all over the place. Some showing the Conservatives lead as small as 3%, and others indicating the lead as wide as 15%. But what's not in doubt, it's shrunk from the 20+% it was when Theresa May, who is a member of the Conservative Party, announced the snap elections about a month and a half ago. Now, interestingly enough, Theresa May skipped a BBC-sponsored debate, which she was widely criticized for. And Jeremy Corbyn, who is the head of the Labour Party, pounced on that decision, talking about it quite a bit in the news, kind of taunting Theresa May a little bit. She tried to keep the focus on Brexit, while Corbyn was saying that she's not able to lead those negotiations, that she can't even show up for debate. It'll be interesting to see what happens with the polls next week, as late last night we had another suspected terrorist attack in the UK, killing 7 people and injuring about 40. A van drove onto a bridge, London Bridge actually, attacking groups of people and running them over, while there were stabbings in the Boroughs marketplace in East London. So terrorist attacks have been in the past helpful for the polls on the conservative side. We will see. U.S. pulled out of the Paris Climate Agreement. While a lot of CEOs decried the deal, stocks actually rallied. They rallied immediately after the decision and then continued to rally late in the week. The Beige Book was less upbeat. 7 of the Fed's 12 districts reported growth as modest, while 4 reported moderate growth and 1 district was flat. Markets were expecting a little bit stronger than that in the report, but they still expect the Fed to hike rate in June, although it's gone from about 95% to about 91.5%. Italy's elections are moving closer. Elections could come as early as this autumn if the Italian parliament adopts a new election law resembling Germany's system, with a 5% cutoff for smaller parties. If that law is approved in the coming weeks, the Italians could go back to the polls around the same time as Germany in September 24th. The Italian election was expected to be held later in the year or even early next year. The ruling Democratic Party and the Eurosceptic Five Star Movement are nearly tied at the top of the Italian polls. And Europe continues to grab the spotlight or hog the spotlight in terms of growth. Manufacturing in the U.S. and China moderated slightly in May, but Europe continues to show strength. The Eurozone Manufacturing Purchasing Managers Index firmed to 57 from 56.7 for those of you that don't know. Anything above 50 shows growth. Anything below 50 shows contraction. That move is the highest in 6 years in the EU. The United Kingdom's PMI stayed robust, 56.7, down from April's 57.3, but still strong. While the U.S. ISM Manufacturing Index saw a slight improvement to 54.9 in May from 54.8. While China's official PMI stood unchanged at 51.2, the Caixin PMI, the manufacturing Caixin, we've got services and composite Caixin early this week, but their Caixin PMI dipped to 49.6 from 50.3. Again, 49.6 is contraction, but the official government one still stayed elevated. We've got 492 of the members of the S&P 500 already reported first quarter earnings. We're essentially done with Q1 earnings. That's about it in the review of last week. Let's look at the economic calendar for this week. Starting with this evening, we have local elections in Mexico, so we'll see what party comes out. I don't have any information on the polls there. Wasn't something that was really going to affect anything, although you'll see on the charts that the Mexican peso has been getting stronger against the U.S. dollar. We do have Australia's AIG Performance Service Index in May, but I don't have an estimate for that. We've also got Japan's PMI Services and Composite, Australian securities inflation year over year, and China's Caixin PMI and Composite all late tonight. Don't have an estimate for any of those, but all of the PMI numbers that I mentioned are all last above 50. You've got 52.2 and 52.6 on Japan Services and Composite, and then 51.5 and 51.2 on China's Caixin Services and Composite. Remember, their manufacturing was below 50, but the official government PMI was still at 51.2. Moving on to Monday, June 5th. Starting out at 3:30 in the morning Central Time, we've got the UK's Market Services PMI and Composite PMI, 55 expected on the services, 55.5 expected on the composite. Then at 9 a.m., this is all Central Time, US ISM Services Non-Manufacturing Composite for May, US Labor Market Conditions Index Change for May, U.S. factory orders for May, and U.S. durable goods as a final number for April. U.S. factory orders for April and U.S. durable goods orders for April. Those are both finals. So starting out with the ISM non-manufacturing composite expected at 57.1. 57.5 was the last. Labor market conditions change index expected at 3. It was at 3.5 last. And again, those April numbers, factory orders and durable goods, are both expected to be finals. We're only looking for a change in durable goods. Factory orders expected to be down 0.2, and durable goods, the April final, expected to be down 0.5. Factory orders was up 2 last and down 0.7 last. Going on into the evening, we've got Japanese labor cash earnings year over year and real cash earnings year over year. On the labor cash earnings, we're expecting an increase of 0.3%. Then you've got Australian current account balance in Aussie dollars. And then we've got the all-important Australian Reserve Bank rate decision, not expecting any change, but we'll look for statements on asset purchases or any of the programs like that. The rates are expected to stay at 1.5%. Moving on to Tuesday, June 6th. Light day, 4 a.m. Central Time. Eurozone retail sales year over year for April expected up 2.1% versus 2.3% last. And then in the evening, 8:30 p.m. Central Time, we've got Australian gross domestic product, quarter over quarter and year over year for the first quarter. Quarter over quarter is expected to have grown 0.3%. Year over year is expected to be up 1.6%. Wednesday, June 7th. Starting out at midnight, Japanese leading index for April and the coincidence index for April. Leading index supposed to be 104.3 versus 105.5 last. Coincident index for April, 117.5 expected versus 114.4 last. Then you've got German factory orders year over year for April, expected to be up 4.7%. Moving on down the line, all the way down to 7:30 in the morning Central Time. Canadian building permits month over month for April. No estimate on that. U.S. Department of Energy or the Energy Information Administration, the EIA crude oil inventories, as always, 9:30 Central Time. Then moving on to 6:50 p.m. at night, Japanese gross domestic product annualized for the first quarter. That's expected to be up 2.4% versus 2.2%. Then at 6:50 p.m., we've got Japanese gross domestic product annualized for the first quarter, expected to be at 2.4%. And we've got the trade balance basis yen, expected to be at 494 billion yen versus 865.5 billion yen last. Then at 8:30, we've got the Australian trade balance in Australian dollars, expected to be down about half of what it was last, at 3,107 million, expected at 1,950 million Aussie dollars. Moving on to Thursday, June 8th. No time scheduled. We've got Chinese trade balance for May. That's expected to be at 47.8 billion US dollars versus 38.05 billion last. Then at 12:45 a.m. Central Time, we've got Swiss unemployment rate for May expected to be at 3.1% versus 3.3% last. German industrial production year over year for April, looking for 2.1% versus 1.9% last. Then at 2:15 a.m., Swiss consumer price index year over year and the harmonized year over year. We're going to look just at the year over year for May, which is expected to be up 0.3%. Moving on to 4 a.m. Central Time, Eurozone gross domestic product year over year for the first quarter, expected at 1.7%. Moving down to 6:45 a.m. Central Time, we'll be looking for the ECB rate decision. Again, expected no changes. We'll also be looking for, even more importantly, asset purchase target. It's supposed to be 60 billion euros right now. We don't expect any change at this point. A change would be a surprise. Those are the things we'd be looking at. So look at the central bank rate decision at 0% on the rates and the asset purchase target, and then any statement that could follow. 7:15 in the morning, Canadian housing starts for May, expected to be at 203,500 versus 214,100 last. Then at 7:30 Central Time, Mario Draghi will hold his press conference addressing that rate decision, where you would hear any sort of statement that I just mentioned a few seconds ago. Then we've got initial jobless claims and continuing claims. Initial jobless expected at 240,000. Continuing claims expected to stay below that 2 million number at 1.920. 9:30, Bank of Canada releases its financial systems review, sort of the equivalent of the U.S. stress tests. Then moving on to 8:30 p.m. Central Time, we've got consumer price indexes out of China year over year. And producer price index year over year out of China. 1.5% expected in the consumer price index versus 1.2 last. And producer price index 5.7% versus 6.4% last. Then just before midnight, Japan's tertiary industry index month over month expected to be up 0.5 versus down 0.2 last. And then finally, Friday, June 9th, decent data day, 1 a.m. German trade balance numbers in euros. Expected to be 23 billion versus 25.4 billion last. UK industrial production year over year is supposed to have fallen 0.3% versus 1.4% last. That's at 3:30 a.m. Central Time. And then also at 3:30 a.m. Central Time is a slew of other UK numbers. Manufacturing production year over year for April, expected to be up 0.7 versus up 2.3 last. Construction output year over year is expected to be down 0.3 versus 2.4 last. And then a slew of other second tier numbers coming out at that same time. Then 7 a.m., you've got a gross domestic product estimate for the UK. I don't have an estimate for the gross domestic product estimate for May. 7:30, we've got Canada's unemployment change. Net change in employment expected to be up 17,000. And the Canadian unemployment rate for May is supposed to be at 6.6% versus 6.5 last. And then last but never least, U.S. Baker Hughes rig counts. Now the 20th week in a row of rig rises. We had a net gain of 8 rigs on Friday, this past Friday. We had 11 oil rigs added and 3 natural gas rigs come off for a net gain of 8. That's everything on the fundamental front for the coming week and a quick review of last week. So let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob. Euro US dollar moving higher on Friday, catching on the rising rotation zone, getting through the prior swing high, which was resistance. Continued move higher. We're watching for a test of our significant level coming in 113.13, and then we have a GAN level projection coming at 113.21. So those are going to be the next target areas for a higher move. Then above that, 113.75. On a pullback, support's going to come in at the prior highs, 112.68. If we get below that, we're going to be watching for next major support area at 112.36, significant level. Then if we break below that, the 112.14, where we have the rising 8 and GAN level, and on an even bigger drop, the 111.80 level is going to be key. Over to the pound US dollar. Pound US dollar in consolidation, staying pretty much within this big down candle. Friday inside day did not exceed Thursday's highs or lows and did not exceed Wednesday's highs or lows. So this is a decreasing high, increasing low consolidation pattern. On a rally back up, we're going to be watching for resistance coming in at 129.15 to 129.21. First key areas above that 129.30. If that is broken, next key levels are this trend line 129.45 area and then the 129.62 area. On a move lower, first level support 128.45, next level of support 128.29. Then we could see 128.13 to 128.07 area, rising 50 and GAN level. If all that is broken, 127.92 to 128 is going to be very key support. US dollar, Japanese yen, redrawn trend line, closing below the defining point does trigger a trade. There's really nothing that can be done except on a scalping basis because the first target is 110.24 based off our single candle rules. So that's going to be the first level to watch for support, where we also have another trend line coming in. If that is broken, the next target down for a lower move is 109.82. The 109.82 followed by the 109.69. Those are your key levels lower. Once that 109.69 is broken, if it is, watch for a gap fill from way back at about the third week in April, which would put us to 109.38. On a rally back up, first key level of resistance going to be minor resistance 110.47. Next pretty major level of resistance is going to come in about 110.75 to 110.85, right in here. Then if that's broken, our significant level 110.92. On a very big rally up, the next major area is this whole cluster 111.20 to 111.26. Then once that's violated, the 111.65 significant level. US dollar, Swiss franc, big move down on Friday. This also closed below a trend line defining point. To put that into perspective, it is going into a clear path move. This is slightly advanced clear path because of the tail configuration. So what we'll be watching for on moves lower, we will be watching for our GAN projection level 96.12, followed by significant level 96.06. Next major level down 95.58, and then the full target for this trendline trade would be 95.47. If it turns around and moves higher, first key resistance 96.56, followed by the defining point coming in at 96.67. Then we could see a return to 96.94 area where we have a declining 8 and significant level. If all that is broken, the 97.21 to 97.29 level is going to be key. We also have this trade occurring in the direction of the rotation zone. You can see it flat, moved up to the rotation zone, and now it's fallen sharply. Aussie US dollar. Move lower on Thursday, followed by a sharp reversal on Friday, right at the GAN cluster 73.81. So we've moved back into this sort of consolidation area. On a move higher, it ended with this flat 21. That's going to be minor resistance or support either way. So watch for that area right around the 74.41 for especially intraday support or resistance. Next major level is going to be the 74.54 area, this high in GAN level. Then if it moves higher, 74.67, followed by 74.74, and then on another strong move, retest this declining trend line and GAN level coming in right around the 74.83 to 74.87 area. Turns around and heads back lower. Support coming in around our defining point 74.16 to 74.14. Then we'd have to see a return to the 73.80 area, and then on a bigger drop below that, the 73.61. US dollar, Canadian dollar, still consolidating, went up. The upper end of the rotation zone spiked through, went slightly above our significant level, dropping back strongly to the GAN cluster, right around the 134.81. So on a move lower Sunday and Monday, next major level down is going to be the 134.37. You might see some key support coming in about 134.70 before that. If that 134.37 level is broken, watch for about the 134.20 and then possibly down to the 133.87. On a turnaround and a move back higher, 135.08, first level of resistance. Next area about 135.20 to 22, then a retest of the significant level 135.40. If we had a sustained move or a close above the significant level, you could see a pretty quick move to 135.80 area to 87 right in here. Finally, over to the US dollar, Mexican peso. Sort of consolidating the last 3 days after this big, strong up move. So, continued move up on Sunday and Monday, 1873.75 first level. Then our defining point coming in at 1877.16. Then if that's broken, we're going to be watching for 1880.20, followed by 1881.74. We have another GAN level and declining 50. On a move lower, minor support coming in at 1857.86. Major support coming in about 1855.53 to 1855.13 area. These key lows, if that is broken, we're going to be watching for a return to about 1848.40, followed by 1845.92. That's all we have for you with our weekend update. Turning it back over to you, Bob.
Thank you for that, Michael, and thank you guys for watching. Don't forget there's a new Money Path podcast out. You can see it on our website at pathtradingpartners.com, or you can listen to it in the Apple iTunes Store or Google Play. It's called the Money Path Podcast. Hit like on this video if you like what we're doing, and don't forget to subscribe, and we will talk to you guys in the next Path Chat. Cheers, everyone.